Alrighty, guys, you saw the title of the video. Let's break down two stocks I'm heavily considering buying right now. One is more of a long-term play, and the other one as more of a short-term play, guys. So we got to break down some numbers for the long-term potential stock I buy, and we have to break down some charts for the short-term stock that I'm looking to buy. So without further ado, sit back, relax, take a sip of your water. And by the way, thanks for all the birthday wishes, guys. Yes, today is my birthday, and I appreciate all you guys for reaching out, dropping comments, all the DMs. I appreciate you as always. And with that being said, let's just dive into it. Let's not waste any time because I actually have a dinner reservation here at about 7 p.m., which is about an hour and a half after this, or from right now when I'm filming, guys. So I got to get this video done and out there because I told myself earlier today I wanted to film a video today, right? And it is my birthday after all. So here we are, guys. This is what I want to do on my birthday. So let's talk. Stock number one is Chewy, guys. Ticker symbol CHWY. And I did mention this, I think, in my video yesterday because Chewy does report earnings this week, actually in 2 days from now on Wednesday. And let me actually refresh you guys and myself for that matter in terms of what's expected here from Chewy. So they report on the 1st of June, which is, let's see here, after the market, and they're expected to do an average EPS of negative 13 cents, so unprofitable for the quarter, with average revenue estimate, let's see here, of $2.42 billion, which is up about 14% year over year, if that number does end up coming out, or being what they actually report, 2.42 billion. So Chewy's the one that I'm heavily considering right now as a longer-term play. Nothing crazy. I'm not trying to put, excuse me, guys, all of my money into Chewy or anything crazy like that, but I'm considering it as kind of a higher growth stock with a lot of upside, in my opinion, right? We've seen a lot of growth in the revenue over the years, which we'll talk about here in a second. We'll also take a look at profit, net income, cash flow. So make sure you guys stick on throughout. This should be interesting. So Chewy hit $120. Now it's at 27. And the crazy thing is, before Corona, it was right where it is right now. So it pretty much ran up a ton, lost all the gains. And mind you, the business is still growing, but the stock price has been, well, it grew initially, and now it's been destroyed. So we have this divergence, if you will, between the actual business and the stock's price. And you've seen that a lot in the markets that we're in right now, right? A lot of stocks got way overblown, way overvalued, and Chewy's one of them. Let's be honest. Chewy is one of them. So let me pull up. I don't want to focus too much on the charts here for Chewy, but let me pull up Yahoo Finance and show you guys a little bit of these numbers here. Let's dive a little bit deeper into it. So right now, Chewy has roughly an $11.4 billion market cap. And let me double check. You guys can see this. There we go. $11.4 billion market cap. EPS trailing 12 months, negative 18 cents. And Yahoo Finance has them at $55 1-year target estimate. But you guys know you got to take that with a grain of salt. Who knows where it's going to be in a year from now? Nobody really knows where it's going to be a year from now. And they do have them pegged at overvalued, which I don't know if I completely agree with that, but who knows? That's what they're saying. And with that being said, let's dive into these numbers. So for total revenue, let's look at the top line for a second. Total revenue, and this is back to what? 2016, is that when they went public? I believe that has to be when they went public. I don't even know, to be honest, guys. Oh no, it looks like they went public here in 2019. Oops, my bad, guys. But overall, we do have data from before that. So total revenue in 2016, $900 million, 2.1. We have here in 2018, they did 2.1 billion. 2019 they did 3.5 billion. Just to show you guys the growth here over the years, guys. So 2.1 bill in 2018, 2019 3.5 bill, 2020 4.8 billion, 2021 7.1 billion, and in the trailing 12 months they've done about 8.8, almost $9 billion on the top line. And I mentioned this in my previous video. If you look at their market cap, which I just told you guys, $11.4 billion, and you look at their trailing 12 months in terms of sales, their price to sales ratio is pretty dang low. Pretty dang low for a company that is growing pretty nicely over the past couple of years. Their price to sales is just a little bit over 1, which is pretty crazy, guys. So let's look down here a little bit more in terms of, how much money they're burning. Because with a company like Chewy, like I said, they're not profitable. So that means they're burning money. Now, if we look here at net income, it looks like trailing 12 months, they've lost about $73 million. $73 million. But look at this. If I show you the past couple of years, that loss has actually been decreasing a lot, which is a good sign. In 2018, they lost $700 million. 2019, they lost $270 2020, they lost $250 million, and now in 2021, they lost $92 million, and now again, trailing 12 months, $73 million. So that loss is narrowing, which is great. And let me know if you guys do want me to do more content like this where I break down, the numbers a little bit more. We look under the hood of the business and kind of see how it's doing. If you guys like this content, let me know in the comments. It's greatly appreciated because at the end of the day, I want to make content that you guys like watching. And of course, that I like making, which I do like making this type of content. So let me know down below. And another thing that you guys got to keep an eye on is the ordinary shares or the outstanding shares. Here on Yahoo Finance, it's ordinary shares number, which is pretty much, it's going to show you, are they issuing a lot of shares? Are they not dilute? Or, well, if they're issuing a lot, they're diluting you. Or are they buying back shares? So if we look here, they have been issuing shares. Nothing crazy, nothing like we've seen from other companies. But it seems here 398 million shares they had in 2018. 2019, about 400 million. 2020, about 401 million. 2021, 415 million. Trailing 12 months, it's right around 420 million. So they are issuing shares, but nothing way too crazy, right? Nothing way too crazy. And when it comes to total assets, I like looking at current assets over current liabilities. Now, this is where, when I was looking earlier, guys, prepping this video, this is where I was like, ooh, they don't have more current assets than current liabilities, which is not the best sign, guys. We can see here total assets, or current assets rather, $1.3 billion. Current liabilities, $1.6 billion. So for that, it's also called the current ratio. I like to see it over 1. I want to see that the company I'm looking to invest in is able to pay off their current liabilities with their current assets. In other words, if you guys don't even know what that means, current assets are assets, or rather current liabilities. Both of these are very short term, right? Assets, for current assets, you can liquidate these pretty quickly within a week, 2 weeks, couple months, whatever. Current assets, right? Current liabilities are liabilities that are owed within the next 12 months. So short-term liabilities. So by the looks of it here, they can't pay off their short-term debts with their current assets, which I don't like seeing. In fact, I like seeing cash, just their cash equivalents, and short-term investments, just that. Forget about receivables. I want and inventory and all that. I want to see their cash alone be able to pay off the current liabilities which are owed in the next 12 months. And they can't do that, right? Cash right now, cash equivalent, short-term investments for Chewy are about $600 million, which is a lot of money, guys. But for Chewy, considering their current liabilities, $1.6 billion, they don't have enough cash to pay that off. So that's a red flag that I'm personally seeing here. It's not a deal breaker. It's nothing that I can't, or it's not going to be the deciding factor, but it's one thing that I'm looking at and I'm like, okay, their balance sheet isn't the most beautiful, pristine thing out there, but it's not horrible either. They do have some assets here. Their assets have been growing. Let's look here at their total liabilities. Have they been growing over time, or rather decrease? I mean, they've been growing as expected because they do owe. Or rather, they do have a lot of, total liabilities, long-term debt. Look at that, long-term debt. And what are some current liabilities? Payables, which are probably owed out to, accounts payable, to companies. that they bought, products from, inventory, things like that. So yeah, it's interesting, guys. These numbers are very much worth diving into. I don't want to go too deep into it because I don't want to bore you guys, but I guess one thing worth mentioning here is they are cash flow positive, free cash flow positive. Look at that, trailing 12 months, $8.5 million free cash flow, operating cash flow $191 million, investing cash flow $193 million. So they are free cash flow positive, which is great, and that really just started in 2021. That was their first free cash flow positive year, which is solid. So overall, I think Chewy is heading in the right direction. Obviously, there's more that we have to do in terms of research, but I don't want to be too long on this video with you guys because, again, I do have that dinner reservation at about 7 p.m., and I got to get showered and ready. But overall, Chewy is beaten down a lot. Growing company, their losses are narrowing. They're almost getting to profitability, which I have to dive deeper into the 10K, the 10Q. As you guys can see, there's a lot of research that goes into this. I have to run models as well, project the revenues, the profits, scale it back. You guys know how that goes if you run models for your individual stocks, which I like to do that. I don't base my whole decision on the models, but obviously I do like running those and looking at ratios like we did. It's very important. So with that being said, that's one stock I'm looking at as a longer term play right now. And number two, for a shorter term play, I'm looking at Applied Materials. And this is simply because the technicals, based on what I'm seeing, look pretty decent in my opinion, right? Applied Materials has obviously come down a lot, and the ticker is AMAT. But what you're noticing here is on Friday, it had a 4% green day, very nice green day on Friday, and it's been breaking out of the moving averages. Finally, it's starting to move out of these big resistance points that have been a big resistance for almost 2 months at this point in time, since the end of March, early April. So Applied Materials right now, you see my alert, it's at $120. $120 is where we closed on Friday, slightly under that. And that's been resistance for over a month. You guys can see the stock has tested 120 4 or 5 times and it's failed. And at this point, since we are getting a golden cross, we're above the moving averages, I think it's going to end up breaking out. I think there's a big likelihood it ends up breaking out there. And I'm not saying for sure, but I do believe it will. And if 120 does break, the next point I'm seeing this going to, no joke, guys, the next big gap to fill is anywhere from 140 to 145. You can make an argument for 135 as well. These are points where Applied Materials could end up going. So keep your eyes on this. There could be anywhere from, depending on where you get in, obviously, if you get in, I'm not telling you what to do, but there could be upside of anywhere from 8, 10, 12%. Let's say you time it perfectly. You get in at 120, you exit at 142. Let's say it plays out beautifully, which probably won't happen, but let's say it does in a fairy tale land. You might be able to get 15, 20%. That's just what I'm basically seeing here. And, of course, that implies we're going to get a huge market rally, or the rally we've gotten continues, which is not guaranteed. Nobody really knows what is going to happen with that. And let me take an eye or a peek at these futures, guys. They probably open up here in a little bit. Let me get some eyes on what's going on here. Yeah, futures market is up. Is it up right now? Yeah, it looks like it's up a lot. On the 30th. Yeah, that's today. Yep, that's today. I should know that. It's my birthday. Yeah, it's up over 1%. The NASDAQ futures are for the day. It looks like the Russell futures are up 0.4% on the day, or for what we've gotten so far in terms of trading. S&P futures up 0.5%, so we might be in store for another green day, guys, tomorrow if this ends up holding into the pre-market, or if this continues, guys. So what do you think? Let me know your thoughts. As always, and wait a second, were we up even more? Hold on, wait a second. Let me know your thoughts, guys, in the meantime while I do double check what's going on here. Yeah, geez, look at these futures. I mean, they've been ripping all day, even yesterday it seems like. So yesterday, last night. ES, NASDAQ, Russell, Dow, everything's ripping, guys. So what do you think? Let me know your thoughts in the comments. Hit that like button, drop me a comment, subscribe, and join my Patreon if you want all my real-time buys, sells, call-outs, morning update videos. Now's the time to check it out if you want. The new month is coming right around the corner. Check it out, link down below. And don't forget, the promo, what is it? The promo for Moomoo and Weeble, that is running out literally in a day or two here, end of May, or actually one day. So if you haven't gotten your free money for Moomoo, Weeble, check that out, link down below. The offer is not going to be as great in a couple of days, so use that link down below. I'll catch you guys in the next video. Peace out.